Greetings everybody, and hopefully in this video we'll be able to explain what the difference is between being independent and being captive so that you can thoroughly understand what the differences are so you're comfortable making a decision from there. So first things first, what is an IMO, FMO, and all these different abbreviations? These are typically independent agencies that represent a cluster of insurance companies. Captive means you solicit for one insurance company. So an IMO and FMO is not an insurance company. It is basically an organization that negotiates the agent's compensation plan, the percentage they make, the different products that are available, and they represent a cluster of companies. So the pros of this is that you have more companies, which means you have a wider market reach when you go propose products to your clients. The captive side, you have one company. So what happens here is this one company can either have one product. There's a very, very popular company out there that only sells term and nothing else. They have one product and it's term life insurance, which basically terminates or expires. There's nothing wrong with that whatsoever. And there are probably a lot of individuals that have made a lot of money selling simply term. The problem is when you get to a certain point, this term gets replaced with something that could be perceived as a better product. It could be an IUL, let's just say. It could be a return of premium term. Let's just say this company doesn't have a return of premium. There are products that return all of the client's premium at the end of the term. So if you have something for 30 years and you're paying monthly on it, you could look at it like you're putting money in a bucket, and eventually at the end of the term, 30 years later, they can get all that money back. This agent will have less of a market to solicit, and two, if an agent comes across this client with this option here that independent agents have and the captive agent doesn't, then they're going to lose their business. So you're going to have lower retention. Now, there are captive companies that have multiple products. They have term, they have whole life, they might have an IUL product. So the more products, the better. Now, you might be asking, why doesn't everybody go independent and have all of these carriers that have all of these different products? These are all different companies. This is just one company. These IMO and FMOs have a cluster of different companies and so many other products. Why don't agents immediately go independent day one? There are other industries that require a lot of criteria before you're able to go independent. In the insurance industry, life insurance to be exact, you don't need to have experience to be independent day one. Now here's why agents typically go captive at first before they go independent. Why agents go captive is the captive companies typically, truthfully, have better recruiting campaigns, right? They know how to sell you better on the opportunity. There could be more training and structure, more mentorship. There's an iron fist approach. So whether you are a person that likes to work, doesn't want to work, regardless, if an iron fist is leading the organization, they're going to make sure you're on calls, you're on trainings, and that could potentially be better for you regardless if you want the pressure or don't want the pressure. They are going to make sure that they bring the best out of you, whether it's for their own interest or for yours. It helps you either way. But that's why agents typically make the move there. More accountability, there's more mentorship, better training, better structure, and they're better at the recruiting campaigns. And they typically will predominantly recruit unlicensed people. So this kind of ties into the recruiting campaign part, where they'll post, say on their social media, you've been following an individual, they're just posting how much money they're making, and you're like, wow, this is pretty interesting. This individual's been doing pretty well for a couple of years. I want to inquire with them. You may have visited Indeed, LinkedIn, a job board of some kind, and seen an ad or a post that said, you know, make X amount of money every single year if you sell life insurance. It would have piqued your interest. So there could be several reasons why you initially inquired and you wanted to work. And usually captive companies are better at structuring this. I've worked captive before, so I understand how they reel people into the opportunity. And I've seen it firsthand where the training, the structure, the mentorship, and everything else in between is more intact, right? So a lot of agents do start off captive, and a lot of them do end up going independent. And there are a lot, like I said, that stay captive, even though they have the option of going independent. On the IMO, FMO independent side, and like I said, this is not an insurance company. This is just, look at it like an agency with a cluster of companies that has earned carrier relationships that you couldn't probably do on your own. You can't go to these carriers, a lot of them, probably 99% of them, and say, I want to contract with you directly. I don't want an agency involved. They usually like when an agency the agency is involved because of bad business potentially. You might roll up debt. You might not follow, rules, regulations, compliance. They don't have time to manage agents, so they typically will rely on an agency to do that. So on the IMO side, you have, we said, more products and more companies. And this isn't applicable for all IMOs and FMOs, but there could be less structure and training. This is all depending on, and it's all contingent on the agency that you work with. This is not applicable towards every single agency in America. There are relentless agencies and teams that know how to structure things, that train their people and mentor them and ensure that their agents are successful. But if you do your due diligence and do your research, you'll notice that with independent IMOs and FMOs, there's usually less structure and training. It's more comprehensive and could take longer. What do I mean by that? Well, if all you have to worry about is one company and 3 products, or even 1 product, versus 20 companies and probably 100 products, you're more likely to master your craft and understand the products a lot faster and be released a lot faster if you're captive than you are if you're independent. Now, there's a way to control this. If you decide to go independent and not work for a captive company, and you have all of these companies, choose the top 3 to 5 companies, tops. I would probably do 3 to start, and master their products before you try to get down every single company and solicit every single company. People are making it with 1 company, you'll be more than fine with 3, 4, 5, maybe even 1 on the independent side if you choose to do that. As long as their products are competitive, as long as they work in your client's best interest, the rates are competitive, and they have instant issue, which we'll talk about shortly, versus full underwriting periods, then you won't have a problem being on the independent side, just starting with 1, 2, maybe 3 carriers, and then expanding from there. Most IMOs will allow this. Even if you're contracted with all of them, just prioritize the top 3. Once you get the groove of things and you're selling, you understand how the business works, how the products work, you can expand your market from there. Now, if you're captive, you don't have that option, unfortunately, unless your captive company decides to add a new product, which doesn't usually happen very often. So there are some IMOs and FMOs that let you contract outside of their agency. So what's that mean? You're already with one IMO, independent marketing organization, and the contract that you signed with them doesn't state, or if you did sign a contract, whether you did or didn't, it doesn't state that you are not allowed to have a different IMO. You're not allowed to work with a different company, let's just say. Whereas some of them don't let you. So these vary from agency to agency, whether they let you contract outside of their agency or they don't let you. That's going to be in their contract. Is that really important at first? In my opinion, I don't think so. I think that if they have the verbiage in place, it's just to protect their book of business, to protect their trainings, their systems, their processes, their trade secrets, whatever the case may be. It's just to protect and preserve that information specifically for their organization. But there are, like I said, there are IMOs that let you contract outside of their agency with several agencies. So now you have several IMOs, several companies, several products. In my opinion, I think that is overcomplicating, especially for a brand new agent. If you are an independent agent and you're looking to specifically just sell for the rest of your life and you master every single carrier, which is extremely hard, you master all of their products and you just keep adding more and more carriers because you have this overflow of clients and you become this massive producer and this reputable producer across the nation, by all means, you could leverage multiple IMOs. I think it's a good idea and get as many products as you want down. But now you're just strictly selling and trying to sell on a very, very large scale. And to maintenance all of these carriers could be a headache because sometimes they have quarterly requirements. Say they tell you have to sell 20 people every quarter, 20 policies. Every 3 months, let's just say. You have so many different carriers. Some people sell 20 policies a month, some 20 a week. Sometimes they don't do that in a year. So imagine you're prioritizing these 3 carriers, and then all of these start terminating you because of this requirement. So you lose this carrier, you lose this carrier, you lose this carrier, you lose this carrier. You only have your 3. That's why it's nice to prioritize 3, because in the event that this happens here, you don't lose a powerhouse top tier carrier that you really liked, that was competitive, that paid you well, that had a really good product for your client. So again, that's why it's extremely hard. It just depends on the carrier. A lot of them do have this quarterly requirement, so the more carriers, the more headache when you're new. Get down what you know, get it down to the T, expand from there, contract from there. Don't overcomplicate the process when you first start, or else you're going to put yourself in something called analysis paralysis, and you're going to have so much information you're not going to know what to do with it, or where to start, or how to keep these carriers going. You're going to stress yourself out because they're terminating you. You might have to recontract with them. There are times where you lose your renewals and your residuals because when you recontract, you might get a new agent number. Like I said, there's no need to overcomplicate anything. Being captive isn't terrible. Being independent isn't terrible. Just finds what suits you best. And as long as the products that they offer, the products are competitive, whether it's IMO, FMO, captive, whatever it is. As long as they're competitive, as long as there's a diverse amount of products, and you can compete in the marketplace without having to worry about people taking your business. And what I mean by taking your business is the example we used earlier. Well, let's say an independent agent goes to your client, calls them over the phone or knocks on their door in person and says, hey, why'd they get you that product? It's overpriced. I have a better product. And say it's a term. First of all, you're paying too much. Second of all, I can get you all of your money back at the end of the term, right? You get a full refund. Why are you paying more for something you're not going to get any money back on? Easy sale. So if you have competitive products as a captive agent, you have nothing to worry about. If you don't, then you have a lot to worry about from a retention side. When somebody that is independent potentially solicits your client, gives them a better opportunity, it's harder to compete with that client. Because say you call that client and say, hey, you know, I seen that you canceled your policies, or anything I could do to help you. You know, you seen the value in it. You don't want to let go of something that ensures your family, your peace of mind, your security, your stability. What happened? Everything made sense when I was there. Now I see that the policy canceled. I want to make sure that you're making the right decision before we have to go through the entire underwriting process again at a different rate, different cost. The client goes, well, I had an agent come out here and they gave me a better policy, better rate, and I get all my money back. Now, if you're competitive and you can transition to a different product that competes with that, whether you're captive or independent, then great. If you're captive and you don't have the product to transition to, you're basically screwed, because if you try to talk them back into that policy, it's technically unethical. You can't talk somebody back into a policy that is crappier and worse than the policy they got with somebody else. So hopefully that sums it up for you guys. Just make sure when you're making this decision to transition to whatever, whether you're transitioning or starting with a captive or independent company, then make sure you're doing your due diligence. Make sure they're not trying to recruit you just to get the upfront fee from you if they're an MLM styled company. Make sure they're not trying to recruit you to oversell you on a dream and you're going from a better position to a worse position. Just make sure you're scoping the organization out. If you're still in the pre-licensing phase or you just got licensed, scope them out as long as you can and interview them. You know, ask them. The questions you want to ask a company, whether they're independent or captive, is the following, right? First thing, what is my commission percentage? How much do I get paid per deal? And ask them to give you an example of what your deposit would be on, say, 1,000 AP, 1,000 annual premium. AP means is how much premium a client pays in a year. $1,000 broken down monthly is $83.34. So you get an advance based off the annual premium. Ask the company, what is my percentage off of this deal upfront? And if it's very low, you have to make sure that other things compensate for that. So what do I mean by that? If low, do they have technology that is worth it? Free leads that are worth it? How much money could you make if the compensation's low, but they have the technology and the free leads that you need? There are companies that have low comp, crappy tech, and free garbage leads. Excuse my language, but they're very bad leads. And agents don't sell as much. They might think they're doing pretty well, but if they invested that time and energy elsewhere at a different captive or independent company with higher tech and free leads that are actually real, legit, newer, higher in quality, so on and so forth, they can make 10 times, 20 times, 30 times the sales they would be making at this less competent agency. So, second question is, what type of leads do they have? If so, or when they tell you the type of leads, you say, how much are they? If you have to pay for leads, ask them if they can help you if you don't have the money to start. And you want to ask them not only how much is it per lead, but how many leads you need to start your career and be successful. 3, long-term vision. What's the long-term game plan with this company? Are you looking at, personally, this is a question for you, are you looking to get into leadership? Are you looking to build a sales team? Are you looking to just stay solo throughout your career and sell, maybe make 6 figures at best? Sometimes if you're a superstar, you can make 7 figures. Very, very unlikely, just to keep it transparent and honest. Say you want to make 6 figures for the rest of your career and you don't want to build. Is that what you want to do? If so, what is in it for the producer at this company? What kind of perks, benefits? What do they bring to the table for producers? If you're looking to build a team, on the other hand, and you want to bring all of these people in, again, what's the long-term career? Some companies let you build an agency, and the more you build, the more they reward you. You can get to the point of, say, building a really big agency and having a lot of residuals deposited every month from previous business that you sold. Some companies let you sell your company, some IMOs, usually FMOs, let you sell your agency for whatever your agency's worth. Usually it's a 6 to 10x multiple. So what's that mean? Let's just say you built an agency of 1,000 agents. All these circles here represent agents. Your EBITDA, earnings before interest, depreciation, and taxes, is say $1 million a year. That's how much you're making gross before taxes. Sometimes you could sell 6 to 10x. If your EBITDA is $1 million a year, your yearly earnings, gross yearly earnings, gross meaning before taxes, but after operating expenses, you could sell for 6 to 10 times that amount. Sometimes in stock, you can get company stock from a really big company, or you could get cash, or you could get both, stock plus cash. So again, this is very technical. This is for long-term people that have agency building within their desires. And sometimes if you're captive and you build a very large organization, then unless they buy your agency out within that company, which is very, very rare and unheard of. I think I've only heard of one company doing that. Usually the light at the end of the tunnel for captive is monthly residuals get built up. Because you built a big organization, you get residuals on all of your agents, depending on the organization you work for. Then you could get to the point of making 6 figures passively a month, or if it's a smaller organization, that could be yearly. So it just depends. That would be the long-term plan at a captive company. But this is what you want to dive into. These are questions that you are going to ask while you are interviewing the organizations you're looking to work for. Training, what's available? You want some kind of boot camp when you're new to help you understand the business, what life insurance is, what it could do for families, how you get paid, what the long-term plan is, how residuals work, how advances work, how retentions work, how the different products work, what are the different products, all of these things. You want it to be as comprehensive as possible, and you want to ask if you can shadow them before you even start. I used to do this just to show people that the opportunity is real. If they're in doubt, then I'll say, hey, why don't you shadow me for a day or two? I'll get them on the phone, Zoom, or take them out in person, for example, and I'll show them the sales I'm making, and it helps them solidify the opportunity. If somebody doesn't let you shadow them, they say, oh, you got to work for our organization first. It's one of two things. It's one, they have a contract in place with their IMO, FMO, or captive company that says you can't show, other companies are training, or two, they just don't want to, help you because they're truly not somebody that's going to be hands-on when they start training you. So if there's a chance that you could shadow them before you even start, I think that would be the best possible option for you. That way you see the stuff firsthand before you make a move somewhere and waste your time. This is probably the biggest thing, training and boot camp and shadowing somebody, because even if it's only one company with one product, if you can see the success, by all means, they should let you know that this company is reputable, you're gonna make money, you see how the training's conducted, maybe they sent you the boot camp without you even becoming their agent, and they let you shadow them. It's a game changer for sure. So that's a company that you could consider working for, because like I said, they're not all talk. They showed you and they let you shadow before you even started. So basically, this sums up what you should be looking for and how to make your decision, whether you want to be independent or captive. And just to sum up this video and make the process easy for you, look at these 4 bullet points, regardless of the side you're looking to consider. And if you can see the success firsthand, you can ask all of these questions and you feel comfortable because they were very detailed with answering your questions. They took time out of their day and made everything make sense without rushing you into working for them, then it could be a good fit. The biggest thing, like I said earlier, was training and shadowing. If they let you shadow before you even make the move, that way you see somebody's making a sale off their leads multiple times, not just one day, not just one sale. You want to shadow them for 3 weeks. They say, oh, I could show you one day. And the more they can let you shadow, the more proof you have before you make the move. This is considering you already did your research. You may have talked to people there. You've been scoping out this agency, or ask them to let you shadow them. The longer you shadow, the more you'll feel confident and comfortable making the move with this agency because you're seeing the success firsthand. So with that said, I hope this video helped. Make sure you guys do your due diligence, do your research, don't rush into anything, and don't feel overwhelmed. If all you can do is shadow somebody, whether they're captive or independent, and you feel comfortable with the process, go all in, have faith, outwork everybody. If the successful person's doing X 10 times a day, you want to make sure you're doing X 100 times a day. Whatever they're doing, do more. That's what I'm trying to get at. And no matter where you go, as long as you've seen the success firsthand, it's a good business model, they have enough products for you to solicit, you'll be extremely successful. This business isn't about smarts, it's really about work ethic. The person that works the hardest gets the most experience down the quickest, which is the most important thing when you're brand new. They consolidate all the years of experience into 1 year, maybe even sooner, and they see more people. More people in sales. Any sales means more contact. More contact means more sales. So I'll work everybody, put in the hours, sacrifice weekends. The more you work, the higher your chances of success, and the sooner you'll be successful. So with that said, I hope this helped. Best of luck to you all.